And I think you're tagged, so you should get notified on X. All right, and we are live everywhere. What's going on, everybody? Welcome back to Wolf. Welcome back to the ETF Tracker. Got a bunch of stuff going on in the world, and we're here to talk about it. Me and Thomas come on each week. We jump on, talk about all the markets. We had FOMC data coming out. We have Jerome with one last meeting as chairman of the Fed. Today was his second to last. So we'll talk about that a little bit. Got some interesting news coming out of the SEC. Paul Atkins announcing new crypto rules. And there's some interesting things there in regards to mining as well and stable coins. Got a couple of those going. We're going to talk a little bit about the drone sector in the markets. There's a couple of interesting ETFs that we want to talk about as well. Big shout out to Rex Shares for sponsoring the show. Thomas, dude, how are you?
Doing good, man. Yeah, a lot of interesting stuff happening in the world at the moment. So
yes,
yeah, looking forward to the chat.
Yeah, man, 100%. So maybe we'll start with, just because it just happened a few hours ago. I think it was 2 or 3 p.m. Eastern. Jerome went up there, addressed the nation, and said, "Okay, here's some interesting things." Didn't do anything wild though. Like I think a lot of people were expecting it to be, I don't know, at least in our spaces, they didn't have like a ton of big expectations. They ended up just leaving rates unchanged between 3.5% and 3.75%. And a couple other comments he made during it was that near-term inflation expectations have risen, and near-term higher energy prices will push up overall inflation. And those are some of like the main points. There's probably a few others that I missed, but I wanted to see if you had any thoughts on that, how it's going to affect the markets. Right now, Bitcoin's down like 4%. The Qs, the S&P, they're down like 1%. And so I think the market's kind of just at like the same like place that we've been for a while, which is sort of this just like, like grind up kind of, just like, like slowly trudging through the mud type of thing,
Yeah, I mean, so it's I think it is a big story. I do. The fact that they're holding rates, and people had going into this year were expecting more cuts. Like they've pushed things out. Now the market is suggesting just one rate cut this year. When you look at the board, I think 11 of the 12 voted for keeping rates steady, and 1 voted for a cut. But so that's interesting. But when you look at also the dot plots that these guys are projecting out, a bunch of them, I think 6 or 7, are suggesting there'll be no rate cuts this year. And this is a story of the war, I think, in general, because what we're seeing here is basically, energy prices are up, CPI is up, it's going to flow through to inflation. I think a lot of people are wondering, like, hey, what does raising interest rates do for this anyway? Like, okay, inflation is up, but this is not a demand story. It's not like, oh, the economy is going to be running hot because of money printing, or because, there's some stimmy package. No, this is a case of costs are rising because energy costs are rising, energy infrastructure is being destroyed. Obviously, the Strait of Hormuz is being blockaded, or effectively blockaded, where people can't, ships can't get insurance to even go through it. They're too scared to use it. So we've got this situation which the war is massively raising energy costs. Petrol costs are under the pump, and it's going to flow through to the entire economy. I think the market somewhat expected it, but clearly not completely. We did see yes, you see the impact in Bitcoin on risky assets, but even in general, the US dollar did fall. The US dollar rose relative to some of the other fiat currencies, and so you can see that the market was like, oh yeah, we're kind of expecting them to hold here, but let's just see what happens. And I think because of some of the language, because some people are talking about, maybe there's only one more cut this year. Maybe we don't even know if we're going to get another cut this year. I will say some of the other central banks around the world raised rates this year. In Australia, that's where I'm based. Central bank raised rates this year. This week. And so we're in a situation which is a pretty significant uncertainty. And I think it's definitely bearish for risk assets, but it's probably not the most bearish thing like happening at the moment. The Fed is not the big story here.
Exactly.
It's just the one of many downstream effects that we're seeing from this war. But it's also right. They're operating, because the funny thing is that they don't know what's going to happen either, right? Like they're operating in a world where they have to tinker the, you know, operating pieces of the economy. We're going to tinker here, but they're guessing as well. They don't know. Like if they knew what was going to happen in the war, they would have a much better. They would know whether they should be cutting or whether they should be raising, or whether they be holding. The fact that they're just holding rates is more of a, gee, we really don't know what's going to happen here. We don't want to do anything drastic. We have to be prepared for anything realistically, because, you know, if the war is over, if the war is over in 48 hours time, you know, energy prices come back down, we could see them cutting again very soon, which is, I think, what the sort of plan was going back a few months ago. But, you know, this could go the other way, and we could actually be seeing significant inflation flow through. It's a very, very delicate period of time, and, you know, it shows you how tenuous and funny the whole thing is, that you got a bunch of people in a boardroom and they're sitting around going, don't know what to do. Like we have to decide the price of money, which is what they're doing. But we don't really know. We don't have all the information. We don't really know what we're doing here. You know, better just do nothing. But that's actually the situation as it is.
It seems like it, dude. I mean, he's like, brother, what do you want me to do? Like, this isn't what like you mentioned, like, this is not the real story here. Obviously, like half of them don't even believe it. They say things, nothing ever happens. We're still at war. I mean, that's mainly what people need. Probably the price of oil running in the last month has been just like bonkers for investors just all around the world. They just don't even know what to do with that. With Trump, you know, came out like sometime last week and was like, yeah, you know, like prices might go up, but like they'll probably go down later. Like that'll be like the thing that comes out of this. And people are like, okay, you also said the war is probably over, and then it kept going, and then there's another thing. So I think it's chaos just all around the board. And honestly, it might be a great transition to talk about the drone sector. You know, kind of, you know, speak about war, and drones have been like the main topic on the war conversation. Obviously, we saw, you know, Palantir and a few other companies involved with some pretty wild situations with world leaders, I guess you could say. And just like being at the forefront of it, be like, oh my God, like it took us a decade to track over these people, you know, a few years ago. And now here we are, like overnight with Venezuela, Iran. Like it's wild stuff to think about. So talk to me a little bit about what your thoughts are on like the drone market overall. We got some cool ETFs we'll talk about here in a second. And so it's good that just in general, like Rex Shares has some cool ETFs like DRNZ, which we'll talk about in a sec. But there are all sorts of different companies popping up in this sector. Some of them related to AI, some of them more in the tech world. But now we got crazy people involved in these things. So give me your thoughts on this.
Yeah, well, this whole the fact that they're able to run these hot wars with no boots on the ground, and you've got these military, it's one of the interesting semi-black pills, if you'd like, is if you looked at this historically, and you looked at, you know, when you had these big unemployment periods of time, and I was like, what was the one place a young person, at least a young man, could go get work? Well, you go get work in the military.
Interesting.
But we may be at a time in the future coming where, you know, AI is taking the job. I mean, like, I'm not saying I've predicted this, but just AI is taking the jobs. Oh, and by the way, the military is like, actually, we don't need you either because we've got drones. Like, you know, it's quite a humorous thought there, right? But now they're able to, you know, they're running wars without even needing people, which, I mean, honestly, is probably a good thing overall, right? Because
sure,
it's, you know, you'd probably rather see drones go to battle with each other, you know, shooting like rockets firing into each other than actually firing into people. And, you know, the famous author Scott Adams, rest in peace, he wrote this book 20 years ago talking about how the future of, and this is like in 2000, he wrote how the future of warfare is just drones fighting each other. And then you get this situation in which you, like, the countries don't even, this is his model in this, he wrote this book 25 years ago. He's like, we're going to get to a situation in the world where you don't even end up having to go to war with each other because you have one AI versus one AI. And then the AIs do a little simulation. They're like, all right, I'm going to win and you're going to lose. So just concede now.
Wow.
Which is a really funny theory. And I
don't even know if that's a theory. That's really interesting, actually. Like playing out the simulation, almost doing it just like, hey, like why even bother? Like realistically, why bother? Like let's really actually just do chess. That's interesting.
Yeah, do we really need to blow each other up here? Like, we both got the simulation model in front of us. We can see how this is going to play out. But no, to more seriously, we were talking about, I guess in the context of if things were to hit the fan, so to speak, in terms of this war really becoming protracted, it's tough, it's like, and it's like, and inflation's maybe elevated. It's going to be obviously a tricky spot for the market in general. And I think one of the things we've talked about in the past is like, hey, but there's always a bull market somewhere, right? So it might be a general bear market for stocks across the world, but what would be in a bull market? And certainly military tech would be in a bull market. And I think that's when we brought up this Rex DRNZ ETF, because you look at it, it's up 15% in the last month.
Yeah, this is, for context, this is the DRNZ Rex drone ETF. Big shots then for sponsoring. Let me pull up the chart. I had it here. Where is it? There it is.
Yeah, and they've got
killing it.
The thing is, the biggest holding in that is Ondis, which in itself is almost like it's an ETF of drone companies, and then the biggest holding is itself almost like its own individual ETF of drones, because it's just, investing in a bunch of different military drone technology. So it's the kind of thing, something like this ETF, it's not because you're necessarily like bullish on any one company or any one piece of tech. It's just the thematic, it's an opportunity to invest in the thematic. And if the thematic is, hey, it's wartime, it's military on, this is an opportunity to invest in something that should theoretically at least benefit from that environment. And theoretically, but also we're now a month into this situation or thereabouts. And so you can see like, the theory is playing out like, hey, in this environment, it's actually doing pretty well. So that's something like, I don't know, it's tricky because you're ultimately buying into a lot of companies that like, chances are you probably haven't done a lot of research into, but that's the point, I guess, of an ETF, which is at least you're not exposed too much to any one individual company. It's you got a thematic, you're getting dozens of companies, and so at least you have this kind of exposure to the idea. If you want to have like, if you're becoming, I guess, you're becoming convinced that this war is going to be protracted. It's like, what's going to be the investment trend? And I guess the other thing is, and we can talk more about this one, but I guess the other idea is looking at what energy infrastructure will benefit in the face of these higher prices.
Yeah, 100%. Let me come back to that in a second. I was going to say, for people who are interested in that ETF, definitely check them out at Rex Shares. I have a link down below. That if you're on YouTube, it'll be in the description below. If you are on X, just in the tweet below the stream that you're watching right now. So if you're enjoying the stream, definitely be sure to hit a repost. But yeah, hit that link and it can take you to that page. You can kind of find out more if you want. Big shout out to Rex Shares for sponsoring this show. I want to make sure I fit this in as well. Anytime working with ETFs, of course, investors should always carefully consider the fund's investment objectives, risks, charges, and expenses before you do any kind of investing. Their prospectus and summary prospectus contains this and other info about Rex Shares. And if you want to obtain their prospectus and summary prospectus, just visit their site at rexshares.com. Again, that link is down below. Their prospectus and summary prospectus should be read super carefully before you do any investing. But super excited to be working with Rex Shares. They're one of our longest running clients and they're killing it. It's cool that these options are even available. Like I was talking to who was I talking about earlier today? And we were talking about just the development of the ETF space in general. He had said something that was wild. He said there are more ETFs than there are stocks. I was like, brother, oh my God. Because now you have double leveraged single stock ETFs, double leveraged short single stock ETFs. Like there are so many freaking options if there's demand for it. So the ETF world is exploding, dude. It's honestly exploding. But yeah, I would love to talk a little bit more on energy as well, like whenever you're ready, or if you have some thoughts on that.
Sure. Well, I'll just comment on that briefly because I think what's happened is that the ETF has become a wrapper for, like, literally it's the most generalized wrapper for we can do investment strategies.
Yes.
And so that's where it gets interesting, because before it was like, before ETFs came along, it was like, if you're the retail, it's like, how do I short something? Like, it's like, it sounds like in theory, like I don't like or whatever, but how do you actually short something? It's not simple, and you're gonna get margin called, and you're gonna get all these different things, and the tools that might not even be available. And a lot of the time, like you're even you're on some platform and you go like, oh, I want to short this thing, and it's like, oh, now we're going to need you to take some tests to prove that you're financially savvy enough to do this, and then it's like, oh, and by the way, it's going to take 3 days for us to come back and assess your test, and the software is glitching, and it's like, this sucks, and all this stuff. So basically what the ETFs world did was just make like all these kind of generalized strategies which people want to be able to pursue, that hedge funds have done forever, but then they basically just make it easily accessible for retail. So that's pretty cool. I mean, obviously people can get burned when you do some like some of the strategies, like super high volatility. If you don't know what you're doing there, and you just like jump on like a 3x short thing or 3x long, especially when there was some classic stories from a year ago where people were jumping on like these 3x long micro strategy thing, and micro strategy is a Bitcoin is like this historically volatile asset. Then MicroStrategy is leverage Bitcoin. Then people go 3x leverage, the leveraged,
of course,
Bitcoin, and suddenly, suddenly it's like this thing can go and you're dead, and that's what happens. That's like what happens when people don't know what the hell they're doing. So basically, like, do your research. Like, if you're going to touch them, make sure you know what you're doing. To I guess whoever's point was about there being so many ETFs, it's like, well, you can go short, you can go long, you can go 2x long, you can go 2x short. You can any kind of combination of stocks, right? Because I think that's also cool too, where you can now create you can actually generate your own ETFs with, like, shout out to Public. They have this thing where you can generate your own ETF yourself, where you basically come up with a strategy using AI and be like, hey, I want to have a strategy that is like, I don't know, I want to get a real world moat base that's going to protect me from AI disruption, and I want to have this and this and this, and then the AI will come back and be like, well, here are these 30 stocks that
I think financial advisors might actually be cooked this time. Like, people have been saying it for a couple of years now, but like there are some. I mean, we were working with we're building a company called Rallies, and dude, you just like input stuff that you want, and it's like, okay, yeah, sure. Give me 8 seconds. And you're like, oh my God, this isn't, and it's like it's like fully researched. I'm like, the days of waiting, the days of people and like dealing with stuff that you don't need to deal with, those days are going to be over in a couple of years, dude. And it's going to come in stages, like the amounts that we just drop off in terms of usability for human beings. And there will be certain jobs that have to have that human touch and the human nuance kind of thing. But there are going to be a lot of jobs that are cooked, like just not hiring. Maybe they're not cooked, but they're not going to be like, hey, we need to add 30,000 new analysts. It's like, no, we're good. We got four APIs and got a few computers. We're good to go.
Well, I think what's interesting about the whole consulting world is there's basically when you engage a consultant, and it doesn't even matter what the topic is. When a business engages a consultant, there's two things they're looking for. They're looking for the sheer intelligence, which is what's the answer? And they're looking for the cover your ass piece, which is, I need you to tell me it, because if I suggest it myself, I'm responsible for it. But if you suggest it, you're responsible for it. And so I think what's going to happen for sure is that the intelligence piece gets wiped away, because why do I need to go to you when I can just ask an AI and get probably a better answer? Or in any case, you're just going to ask the AI yourself and then present the information to me. So the intelligence piece gets completely wiped away. What is going to be interesting is what happens to that cover your ass angle about it, because when does it become socially acceptable to be like, you know, your management and you're trying to explain to the board and it's like, yeah, I did this, you know, I made this change. And why did I make the change? Because I asked the AI and it recommended it. And it was like, and it's like, because right now, because you can do that, right, with, you know, you can say, what, well, you know, board to management, why did you do this? Well, our consultant suggested we make this change. Fair enough. And then it's like, that's it. Whereas, you know, we're still in that period where if the board says to CEO management guy, why did you do this? And he says, because I asked ChatGPT and ChatGPT recommended it. They're like, nah, you're out.
You're out.
So, but that's like, we're in 2026. Like,
sure.
You know, at what time does it become, you know, there are so many different changes that happen in society. Like if you go back 20 years, you know, it was like a super taboo, not taboo, but like, it was kind of like, you'd be like hush hush about like, oh, internet dating. Like, oh, I don't, you know, like, it was embarrassing. And you wouldn't like tell people openly, like, yeah, I've got this, like, you know, got this account on, you know, some internet dating website. You know, it was seen as like, what's wrong with you? Kind of, it had that kind of vibe to it. And then almost like, and then, you know, overnight, the technology changed. And suddenly it was like, yeah, every single person you know is just using like, you know, Tinder or Hinge or whatever the million apps there.
It did seem like that, didn't it?
And so
fast.
It happens fast when the technology change happens. You know, the social and cultural taboos, the social and cultural norms, they can change really quickly. So it might not, you know, right now, the only thing that consulting has is that, like, still got the cover your ass piece of it. You can't really say, hey, I did this thing because the AI told me to do it. Like, that's not acceptable an answer if someone wants to question you on something. But that might change. Like, we might be talking this time next year, and it's like, yeah, you know, like, hey, what do you want from me? Like, I asked Claude, and Claude is like, just do it. I'm like, okay, you know, it seemed like the smart thing to do. Like, you know, fair enough. Like that, we might be at that. You know, it's like it's almost, it's not there yet, but once that happens, like, you know, it's tough. Going to be tough for consulting gigs. I mean, they'll be still. You're going to have to add some layer of value, but I do think that's going to come a real interesting, tricky piece for us. But going full circle, because I just want to mention this. We were talking about the military thing. The other piece of it, if you didn't want to go investing in, you know, you wanted to kind of diversify, protect your portfolio, but obviously. But you know, you didn't want to touch military because you're like, hey, I don't know anything about that stuff, and you're just not interested. I do think it's worth thinking if you have an opinion about, you know, the way this is playing out with oil. One of the obvious theories is like, hey, there's going to be some kind of substitution effect from other energy, right? Like if we have less access to oil, we're already seeing thermal coal prices have risen significantly. You would think that there will be some benefits to the thermal coal miners and the people involved in that space and this sort of thing. So I'm not like, you know, I'm personally not investing that way myself, but I'm also like watching the space, and I'm thinking about it because it does make sense potentially as a diversifier if there is like a real issue with access to oil, which, by the way, is, you know, I don't know if it's interesting. I don't think the internet has fully grasped the situation. And I say that specifically because the US is like the center pillar of X and everything, right? The internet. But this is a uniquely non-American situation, this war situation with respect to access to diesel and oil. because America is an exporter. America might face higher prices because of the demand supply constraints of the whole world, but fundamentally they're not going to be a real short. You're not going to go to the gas station and like literally not have oil. But in other countries that may well be the case. If you know, just as an example, in Australia, and then there is a theory out there that Australia may be in trouble because it's a importing nation for when it comes to its diesel.
Sure.
But the exporting nations that it relies upon may well stop exporting and actually hoard the stuff for themselves because they need it for their own domestic population. So, like Australia imports its diesel from surrounding Asian countries. And, you know, when everything's running normally, it's not an issue because they have plenty of excess and they export it to us. We pay the price, and it's fine. But there is a theory out there that if they were to turn off the taps because they have a supply crunch themselves, it's like they need to use what they have for their own domestic population, and then Australia can't get access to it, and then you have a whole thing. It's not just an Australian issue; it's an issue all over the world. Now, I don't necessarily like. I bring this up because people on Twitter are talking about it. Financial markets are talking about it. It is an important issue. I don't necessarily think that's going to be. I don't think we're going to see it play out that way. For starters, what we're seeing is, you know, Trump is talking about the fact that like no allies are really helping the US in this war against Iran.
And then says we don't need them though. Yeah.
And so if this really was an existential crisis for UK, for Australia, for some of these other nations, for these European nations, surely the governments would be going, yeah, we better help you, you know, clean up this Strait of Hormuz mess. Like, it's hard to imagine all these countries just basically walking off a cliff themselves where they go, hey, we've got some Mad Max situation coming where we're totally out of oil, but we're not going to send our Navy, you know, out of principle, we're not going to send our Navy to help, you know, kind of clear up the space. Seems unlikely. I kind of don't think that's what's happening, but it is interesting to talk about because, you know, this is what people are worried about. Like, this is what the markets are thinking. And you see it reflected certain pockets of X. You see it reflected in certain parts of, you know, certain areas. People are going like, hey, what are the consequences of this war here? So I do think that, you know, we should look at the signal of the fact that none of the other countries are stepping up to help the US and go, well, it can't be that perilous a situation, because if it were, surely they wouldn't be, you know, sleepwalking into disaster. But did you, Kate, have you seen Balaji's most recent tweet on the issue? Because it might be worth pulling that up.
It's a YouTube clip or it's on Twitter, you said?
No, it's on Twitter, on X.
Do you have the link by chance? Otherwise, I can try and find it.
I should be able to pull it up, because he talks about how one of the things that's really interesting that he talks about is how this isn't just an issue when it comes to like the obvious stuff. He actually talks about how like this is going to affect tech investments, tech infrastructure investments. You know, when they knock down, excuse me, when they knock down the energy infrastructure, it's going to have all these knock-on effects. It's really interesting. See if you can pull it up and we can just talk through it point by point. I really enjoy Balaji. You know, sometimes Balaji's come out with some kind of outlandish stuff. Obviously, super famously, 2023, Bitcoin's gone to $1 million. But the man is very, very smart, and he has a lot of like really great insights into a lot of stuff. So, yeah, look, cool. You pulled it up. So,
yep, got it.
Let's just talk about it. I mean, well, first of all, I like that he just says it, which is, you know, this whole idea that America is just going to go blow up the oil infrastructure in Iran. It's an insane idea, and you know, I really hope the guys in charge know what they're doing. Like, you just really hope, I'm not going to be that person that has a real hot take on the war in terms of like, oh, they should have done it, they shouldn't have done it, whatever, because we don't know, like, fact of the matter is we don't have all the information. Like, we just don't have all the information. But if they're going to start going into Iran and blowing up all this energy infrastructure, that's going to have all these massive downstream effects. And one of the things that's the basic effects is like all this stuff, Balaji talks about the like Maslow's hierarchy of needs in this post, and this idea that like, oh, you thought we were going to fund these data centers and you were going to fund AI and we we're going to fund all of that. It's like, no, we're going to start shifting, reallocating resources to food and energy and all the really basic stuff we need in order to survive in this situation. If you have a situation where you have all these Gulf states in the Middle East suddenly in a desperate war and struggling for energy. And so, what does this mean for, like, honestly, there'll be some super genius out there that's like calculating this and figuring out how does this affect, Anthropic's proper valuation and Microsoft and all this stuff. And basically the point is that it sounds like, oh, some oil infrastructure in the Middle East, this is like, just going to affect them, but it has all these massive downstream areas into tech and AI and all this stuff in a way that you wouldn't necessarily expect if you hadn't thought deeply about the subject. So it's extremely interesting. Balaji also has a point in here, which is essentially how lucky we are that there's been this kind of obsession with climate change over the last decade, longer plus, really, because, basically the idea being that we desperately need to get, as a world, we need to get our energy infrastructure off oil. And maybe this idea that, like, they might have been these like China and basically Balaji's arguing that the long and the short of it is like they were right for the wrong reasons. Essentially, like, it's not because of carbon, it's not because of global warming and all that. What it is like we need to get off oil dependence on the Middle East because they're just at such risk of wars blowing up constantly. But if we can massively scale solar, we can massively scale all this other energy infrastructure, we're no longer dependent on the Middle East and having these crises happening every other decade because there's a war going on. So I thought that was an extremely interesting point.
Yeah, that last one is pretty interesting here. And the last point and the first point you brought up, like the first one here, blowing up all the oil infrastructure in the Middle East, is a pretty insane idea that likely more than just us would be getting involved in. I had not seen this post before. So I must know this guy. I haven't seen this guy before. It doesn't look like I recognize this guy here.
So Balaji is,
yeah, maybe give for the audience as well. I'm sure there's a couple people who are watching who also don't know. Give like the quick rundown on who this guy is.
Yeah. I mean, he's been an extremely successful, investor, and he was one of the original executives of Coinbase back in the day, actually. But he left Coinbase a long time ago, and he's been more famous as an investor. Certainly heavily involved in crypto. But in tech in general, he went super viral couple of different times in Balaji's career on X. I would say at least 2 times he became like the guy on X. You know how there's like a main character sometimes where you have someone that everybody's talking about. Firstly, in early 2020, when he was banging the table about COVID, when nobody really else was, he became like, he blew up massively in early 2020 during that period because he was basically warning about, and I'm talking about like February, January 2020. So like before the pandemic had really begun, and people were like, people like thought this was all hullabaloo about nothing. And then actually, no, it was a big deal. But then he kind of destroyed his credibility a little bit, just a little bit in 2023 because he started banging the table again about Bitcoin and about how actually about the essentially the US financial infrastructure and about how all the banks are going to blow up. And he was posting about all the unrealized losses that have come from these massive interest rate rises, and how it was basically calling for like another global financial crisis, essentially. But essentially, it was going to be a great print, and it was going to, you know, send Bitcoin to the moon. And he had this thing where he's like, Bitcoin was at 30K at the time. He's like, Bitcoin is going to $1 million in 90 days. Like that was his, and he bet somebody $1 million, like famously bet someone $1 million that was going to happen, just to like put some credibility around his bet. He became like the main character again. He's also written a really interesting book. I think it's called The Network State, but he has a lot of unusual and interesting ideas around the future. I would actually probably just describe him as like a futurist. He's a guy that talks about technology, talks about the way the world is going, where the world is going to be in 30 years time, et cetera, et cetera. He's very deep into politics and technology, an extremely interesting individual. He is a Bitcoiner. He's not really but he's not, you know, he's an early Bitcoin investor, but he's more of a VC. He invests in a lot of different things, you know, and it's not to say he nails it every time, you know, who does really, but he has a lot of interesting ideas, and oftentimes he comes to points where he actually just thinks deeper on about an issue than most people does. And I think this is a classic example, right, where it's like, you know, who here is talking about the effect that, you know, this is going to have on data center infrastructure? But if we're expecting like $1 trillion of investment into data center infrastructure, we know a lot of that money is going to be coming from the Saudis, and it's going to be coming from people in the Middle East, all of this rich money over the next 5 years. But that's the kind of stuff, as he mentions, Maslow's hierarchy of needs. Like, you know, when everything is going well, you invest in like the cool cutting edge technology in order to make things even better. But when things are a mess, you start focusing on what humans really need, which is we need food, we need shelter, we need energy. Like, so, you know, in order to get this kind of, this really exciting potential world ahead of us, we can't have it. We can't do the basic things like blow up all the energy infrastructure. And I think it's, you know, and I can also respect, you know, a man like this as well, for he doesn't come at it from, you know, I think it's important when you see like criticism of, say, the Trump administration, he has credibility because, you know, if you were to put a left-right axis, I think it is very fair to say he would be on the right wing. He's kind of a tech right. He you know, he's part of what I would call the tech right. You know, obviously he's not exactly embracing, you know, he's not, there are certain obviously areas.
Well, the parties are starting to blur a little bit, you know, like, you know what I mean? Like the last few years, especially now. So it's hard to describe sometimes politically which way they sway, because everything's starting to fracture.
For sure. But my point is that, you know, when people want to criticize, like, I think there's credibility. If someone's going to criticize a regime or a move that, like, let me put it like this: if someone's going to criticize Trump for this Iran war, one of the things I might ask myself is, are you going to criticize him based on anything he does at any point ever? And if the answer is yes, then I'm not going to listen to your criticism so much, because it's like, you know, yeah, the sky is blue and you don't like Trump. But if it's somebody else that is a lot more thoughtful and, you know, is willing to say, hey, these things are good in this sort of circumstances, but over here I see you doing this and these actions are clearly bad because of this logical reasoning, that's a lot more interesting. And you can see that here. So I, you know, want to bring your attention to him. I suspect you would have seen him in the past, because he can be He's one of those guys as well on X that he'll like disappear for a while. You know, you won't see him for 6 months, and then he'll go hard, and he'll have like 30 posts, and it'll just be like the main guy for like a month, and then it's like, all right, I'm sick of Twitter now, and it'll be off again. But no,
that's honestly probably the healthiest way you can do it.
Yeah, for sure. But you know, he's a very interesting thinker. Also has a good YouTube channel that doesn't have too many videos on it, but he's had interviews with a lot of like he likes to talk tech with like some of the best thinkers in the world. So it's quite interesting.
Gotcha. No, I like this. I like this article. I like the way this guy thinks. I'm gonna have to do a bit of a deep dive on this guy actually. Very cool. Okay, cool. Well, honestly, this it sort of goes in line with you talking a little. Well, I guess kind of. You mentioned he's a little bit in the crypto world. I got a couple of clips here. I'd love for you to have a listen to. These are some pretty shorter, a lot more shorter clips. One sort of in relation to these new crypto rules that the SEC just spoke on here. So I'm going to pull this up. Let me know if you can hear. This should be working yet, but one sec.
Yeah.
All right. Let me know if you can hear this.
So today, I'm pleased to announce that the SEC's persistent failure to provide clarity on this question is over. As we speak, the Commission is implementing a token taxonomy and investment contract interpretation, and you should find that in your inbox or if you look on the website when you get home. Our interpretation, which is grounded in existing law and informed by extensive public input, establishes 4 asset categories that are not deemed to be securities. So digital commodities, digital collectibles, digital tools, and payment stable coins under the Genius Act. With these categories in place, the interpretation then clarifies that only one crypto asset class remains subject to securities laws, namely digital securities, which are traditional securities that are tokenized. This distinction returns the SEC to its core mission and statutory authority of protecting investors involved in securities transactions. We're not the Securities and Everything Commission anymore. So, thank you.
You muted.
Okay, so real quick. So there was that clip, and then I actually think it might be better to combine 2 here. So let me pull this one up as well. So Charles Hoskinson retweeted us today. Big shout out to him, founder of Cardano. I posted a clip here, and he was talking about, and I don't know if this was posted 2:38 p.m. I think this came out later in the or earlier in the afternoon. So this may have been in relation to it. But basically, Charles Hoskinson was talking here on the Goxstein network about the stablecoin securities issue in general. And I don't know if I need to play the whole clip, but he basically, it's in the first few seconds. He says, let's create a new category of security called digital securities for real world assets and let the blockchain be the disclosure vehicle and create a model where you can be decentralized but still be a security. So let me know if you have any thoughts on this.
First thing that should be done is let's create a new category of security, a digital security for real world assets. Let the blockchain be a disclosure vehicle for that, and then create a model where you can be decentralized but be a security. Then once you have that, then Brian Armstrong doesn't care anymore about whether stable coins are securities or not, because he has a compliance way he can list them, do all these things, and he can pay the yield. But instead.
So anyways, let me know if you have any thoughts on those 2 clips.
Well, I have to say, I don't know. I think this might be one of those funny ones where they're looking for a solution for something that the world doesn't actually really need. And I mean, there isn't any product market fit for, which is to say, the one thing that is everybody accepts is, digital commodity and is decentralized and is not a security is very clearly is Bitcoin. And yet, when you look at the last few years, it's really been the proliferation of centralized securities that have packaged up Bitcoin. That's when been the real demand is for, which is to say, IBIT, BlackRock's ETF, the ETFs or MicroStrategy, it's the company and other Bitcoin treasury vehicles. So it seems to me the real demand is from people that are like, hey, I want exposure to the price action of Bitcoin, but I don't want to hold Bitcoin myself because, like, hey, I don't want someone coming to my house with a wrench trying to like ask me for private keys and smash, So it's like, actually the real demand, a lot of the demand is actually, it's like, hey, I want a centralized but a trusted custodian to hold Bitcoin, versus the other way, which is like, oh, I want to own Apple shares, but I want it to be in a decentralized model in which I've got these shares, held on like, my phone or something like that. And then somebody comes in and steals my phone, and they've got access to my Apple shares now. Like, who, do I really want private keys for my stock portfolio? Like, I don't know. It strikes me as not really, to be honest. But I'm, obviously there's edge cases and this sort of thing, and clearly, like, one of the, also there's a place for everything, right? Which is to say, it depends on where your geography is, depends on where your situation in life is. I mean, if you are in the Middle East, if you're in Dubai, and you are like, hey, I want to get out of here because there's wars breaking out. You can't take your house with you. You probably can't take it's actually really difficult if you want to, get your financial assets out of the country, because countries tend to lock that stuff down, right? But the one thing you could do is get some Bitcoin and then leave the country, and now you've got to access your Bitcoin anywhere. So there's still demand for these kind of decentralized assets, but decentralized Bitcoin, or maybe theoretically like a nation state independent stock portfolio. I guess that's kind of interesting idea. But
that, and I think the tokenized assets, like right now, I think actually there was a big thing that just happened earlier, and they moved forward with, who posted it, dude? I know I posted it, but it wasn't there. There was another announcement that had come out earlier in regards. Here it is. So Dow Jones licensing the S&P 500 to trade perps on Hyperliquid, which is an interesting one. It was actually a massive announcement. And the other one was something to do with the NYSE allowing tokenized trading. I think Watcher Guru tweeted this one. And this is like not the first time people have talked about this kind of thing. But let me see. Here it is. So SEC approves NASDAQ rule to allow tokenized stocks and securities trading. I think a big one was just getting the global liquidity involved in here. And I don't know how much that is. I assume it's a ton of money. Like people always talk about Saudi money, the oil money. I just don't know if they're going to dip their toes in because they don't need to. So it's hard for me to know. It's like, the people that we don't have involved yet, are they going to bother because they've done so well in their own respective categories of investing and stuff like that. But you bring up a great point. If you're in an area that's cooked, you're trying to get out, then selling it to someone's gonna be difficult because you're leaving because it's cooked and everybody knows they don't want to buy real estate there, kind of thing. And I guess it does make sense. If you got those assets available at your disposal, you can sell them whenever you want. It becomes highly attractive. It's hard for me to make the case for any other asset than Bitcoin in that scenario. I guess, you bring up some good points around the stocks. Like maybe you want to hold a stock instead. That's also easy to move across borders and that kind of thing. We'll see. I mean, it was inevitable. They were always going to do this. And the second you open up Pandora's box of 24/7 trading, it's over. Like, even if people don't want it, it's going to happen. It's going to be an option. And everything's going to start to adjust from there.
Well, I guess the thing is, right, are the two things, like, I think people do want the 24/7 trading. I don't know that you necessarily need a blockchain for that.
Yeah, I'm not sure either.
I mean, I wouldn't see why you would, but at the same time, I do think that there might be certain things on like the real world, like if you can have settlement of cash happening immediately, because one of the things that happens is, like, when you're buying or like when you sell a stock, it takes 24 hours for you to actually get the cash. So if people want to increase the actual trading flows and this sort of thing, I can see why this is potentially beneficial, but it's going to be, look, I will say that I think the good thing about it is that, like, we're all just sick of hearing about it. So it's like thank you for coming to an agreement, and just we can move on. And clearly it's bad for crypto in general if there's this threat that anyone involved in it is going to be sent to jail for committing securities fraud. So if they can clear that up, like, hey, it's probably a good thing. You know, any kind of removing any kind of this sort of lingering FUD, it's a good thing. It's a good thing. I don't think it's going to have a mass. I don't think it's going to move the needle on the markets massively or much at all, actually. But you know, it's definitely not a bad thing.
Yeah, definitely. And there's a couple other things that came out. Honestly, not crazy important. I think you're right. Like until we see these things like the Clarity Act actually pass forward, I've shared a billion clips of people talking about it. It's going to happen. It's going to happen by March. Okay, by April. Okay, like it'll definitely be done by May. Okay, after the Easter. It's just one of those things. So we'll see what happens. There's a clip here, and we'll probably wrap on this. We talked about all the markets at this point in the show. So for people who are watching, definitely appreciate you guys sticking through. If you haven't already, please take a second, repost the show. Follow Thomas, by the way. He's tagged right above our faces if you enjoy the discussion. Interesting clip here from Mr. Robert Breedlove talking about just the global law, or I guess this is more national, but you know, I think global impact of what happens when you print out $1 bajillion. So in this clip, he talks about, this is a quick quote from it, but the U.S. printed $6 trillion in 2020. Average annual salary is about $60,000. So that's $100 million stored through the counterfeiting of currency, which is the equivalent of stealing 2 million human lives worth of productive labor. And so listen to this clip. This is pretty interesting. I love the way he breaks these things down.
Central banking is an institutionalized system of time theft, because ultimately the fruits of your labor are a product of your time or energy, right? Time and energy used synonymously here. We printed $6 trillion in 2020, right? In the US. The average annual US salary is $60,000 roughly. That's 100 million years stolen, right? Through the counterfeiting of currency. If each human works from the age of 20 to 70, so that's about 50 productive years per human, the counterfeiting of $6 trillion USD equals the stealing of 2 million human lives worth of productive labor. Right? This is to try to make it real, like it's a real massive problem. And then of course the plausible deniability that's built into inflation, right? It's Putin's fault. It's Beyonce's fault. It's the supply chains. It's everything but the central bank. So again, we're back to that romantic lie, the deception and the stealing going hand in hand. I think this is hopefully what we can deliver as Bitcoiners, is pulling back the veil on this bullshit.
So yeah, give me some news here. I mean, it's probably for us as Bitcoiners, it's like more food for thought on things we've thought about, but some pretty crazy stats to bring up there.
Yeah, I mean, look, it's one of those things, right, where it's, yeah, I mean, he frames it as stealing. I would say they probably, the fairer framing is just taxation. And so, you know, what it is it's taxation of the public. Obviously, the one of the core questions that matters is like, what do they do with the money, right? Because they tax people $6 trillion. How is it spent? And then that's when you get into issues of Doge and all this thing where it's like, you hope if they're going to be printing all that. Well, first of all, you might want to live in a Bitcoin world where they can't print money. But if we don't live in that world, you would then hope that if they are going to print the money or they are going to tax the public, that then they're going to use the assets on like the productive things and not just waste it. So I guess that was the whole Doge issue, right? Like looking at actually like, you know, the COVID crisis was a twofold thing where not only did they massively increase taxes, but then they just wasted so much of that spend anyway. Like that's kind of the heartbreaking thing about it, where the taxes increased, but they didn't use it productively. It's not, you know, I think people might have a different view on it potentially if the you know, infrastructure in their cities was much better, and if there was all of these really tangible ways in which the money was being used to improve people's lives, you might feel differently about it. But when you get this massive level of taxation and it isn't obviously beneficial, I think that's when some of the sour feelings towards it come about. But this stuff is also that's an old video clip, and this stuff is all part and parcel of why I think Trump won the 24 election. I think that people were unhappy with the level of inflation in the economy, unhappy with the way the government managed their finances, and that was probably, end of the day, like, people like to think it's all the cultural issues and all this kind of stuff, but across every country all over the world, it tends to show that, like, when your hip pocket gets hit, that's what people vote on. And actually, that's what will be really interesting this year when it comes to the midterms, the election, because it's for sure bad for Trump that we have this situation in which the war is going to increase inflation. And so, petrol prices are up. How long is this going to be sustained? And if it is sustained, that's not going to bode well for the Republicans, because people, as I just mentioned, people tend to vote with their hip pocket. If the economy is good, we'll support the government. If the economy is bad, then people will vote out the government. But yeah, I mean, that was certainly a very provocative clip from Breedlove. Yeah, no question about it.
Yeah, well, he's a bit of a. I like the way he talks, just because I think what you just said, like, it sounds sexy. It's like, it's a philosophical nature. You're watching, you're like, oh my god, like, holy. He's an excellent YouTuber, excellent entertainer, speaks very well. So I agree with you. It probably is a bit stretched, but it's also healthy. Like, if you make a big bold claim like that, it invites conversation to be had. Sometimes you don't make the claim too much and you don't overstep, that you don't even get to the good, like, the meaty part of the conversation. And so I've always appreciated people who do that, because now here we are, we're talking about a clip, ended up performing in the timeline. And I was like, okay, so obviously this is getting people to feel some type of thing. And now here we are talking about it. So, dude, this is a great conversation. I feel thoroughly satisfied of parsing apart these markets. And I always love doing these with you. Is there any any last things you're kind of paying attention to the markets, as we head to the second half of the week, or anything you have coming up?
Yeah, well, I would say, I think we were on 8 straight days of inflows from BlackRock.
That's right. Let me pull this up.
So I do think that's something I'm monitoring, right? Because that's obviously putting upward pressure on the Bitcoin price, notwithstanding the fall of the last 24 hours. So there's something to monitor, right? So BlackRock is sitting at like 785,000 Bitcoin held, which is huge in the context of the fact that they really peaked at just over 800,000. So when you look at the fact that, Bitcoin price is down as much as it is, and yet BlackRock hasn't really, the ETFs, like, they've kept their Bitcoin, you would think that's a very structurally positive thing for Bitcoin, right? Because they're going to be accumulating when price is going up. But if they're not selling the Bitcoin when the price is going down, it does create this kind of supply squeeze effect overall over time. So, I'm monitoring the flows. I do find that very interesting. We'll see what happens with MicroStrategy and the ability to raise money through STRK as well, which is another vehicle for accumulating Bitcoin. So those are probably the two things that I'm monitoring at the moment. Otherwise, obviously, just seeing what happens, seeing what happens in the war coverage, because it's kind of important. We all got to, like, not to even, like, form an opinion about where this is going in the war, but just understanding what's happening in the economy right now. I think it's really important to just be aware of what's happening.
Yeah, no, I think that is a really interesting point. And fair, if what you said there a second ago, if BlackRock's not selling, their Bitcoin price is going down, eventually that has no choice but to create a supply shock. Obviously, the big question on everyone's mind is, like, the long-term effects of derivatives markets and these paper Bitcoin creations, the other treasury companies that get involved, and what happens there. And I'm sure there will be 15 other factors that end up, it's not going to be a simple, Bitcoin's got a supply of 21 million, baby, 1 million tomorrow. Like, we want it to be that simple. But the second Wall Street gets involved, dude, it's going to be all sorts of smoke and mirrors. So I'm glad we're tracking it. I'm glad we got people like you tracking these inflows and outflows. You said 8 days straight of inflows for Bitcoin?
Yeah.
Wow. Okay. Perfect. Well, that is interesting information to add. Cool, man. Well, listen, for everyone who's out there listening in, Appreciate everyone for tuning in. Hope you guys enjoyed yourselves and learned something as well. I always do. If you enjoyed the show, please do take a second, repost it. Again, follow Thomas, follow myself at Wolf Bitcoin, follow the ETF Tracker account you're watching this on. If you're on YouTube, hit the subscribe button for more content. We do spaces and streams all the time on this side of the aisle, so you don't want to miss the next one. And yeah, man, we'll catch you guys all.